JP Morgan boss Jamie Dimon and Citi's Jane Fraser there with her thoughts on the economic outlook as they delivered their results on Friday. Ryan Lamont is the CEO, the co-founder of Neovision Wealth Management. So Jamie Dimon thinks the curve needs to travel up a little bit, shallow recession. Jane Fraser, it's interesting, her last comment was on the debt ceiling. How bad, brutal or destructive a credit crunch are you expecting? Jamie Dimon says no credit crunch. Let's start there. Do you agree? No credit crunch, but perhaps a slight tightening?
It's very hard to say, Manus. The numbers are staggering. If you look at the U.S. federal debt, it has increased by $8 trillion since 2020. We're at $31 trillion. The federal debt per household is $250,000. Now, yes, granted, we're still paying average 2% on U.S. debt, but this is going to increase very, very quickly. Second, commercial real estate. It's delayed in a year's time probably, but it's coming. So it's very hard to say. In 2007, we were saying no credit crunch as well. You don't know. We cannot know today. No one can know today.
I'm looking here at one of the most read stories about the case for stocks becoming more and more bullish. And the Bloomberg intelligence model suggests that the U.S. recession started in 2022. Maybe this earnings season is where we'll see the trough in terms of margin contraction. Do you subscribe to that?
Margins will compress. We discussed this a few months ago. There isn't enough risk exposure out there for the stock markets to drop. On the flip side, we will not get positive economic numbers for it to go up. So we expect it to go sideways from here. The trough generally is when recession hits. This is when we're supposed to see a trough. Let's not forget that the U.S. stock market's performance year-to-date is on the basis of only 9 stocks. That's it. The U.S. stockers has not performed very well, in our opinion, because it's the high multiple tech companies that have performed. It's 9 stocks only, which are the retail stocks.
Well, tech has had its biggest outflow since 2018. That was last week on the Bank of America scenario. They are patient bears on the market. They say the 200 basis points of cuts between now and the election are already priced into this S&P. With that in mind, how tempered are you about risk?
U.S. stocks, since April 2022, we are on the sidelines, like many other institutions, which goes back to my previous point. There isn't enough risk exposure out there for it to drop. Many are on the sidelines, neither long or short. There is an alternative today. It's not TINA anymore. There is an alternative around the world, in the US, in Europe, GCC, Japan, commodities, gold, Bitcoin. There are many opportunities out there that we prefer to sit on the sidelines with respect to US stocks. We are long risk, but not US stocks.
Let's shift to currencies for a moment, because the Bloomberg Dollar Index lost track for 5 weeks in a row. Now the hedge funds, though, have gone all in for the first time in about a year. Where do we land with that particular trade?
With regards to the US dollar, in our opinion, the market is already pricing in a dovish Fed and a recession. Hence, what we're seeing on the dollar. Yes, it's people are coming back in. It could go up again. It's very hard to say. But again, the markets today, whether U.S. stock markets or U.S. dollar, is pricing in future events quite early stage.
The Chinese data will deliver tomorrow for the first quarter, so we'll just see how constructive that this reopening really has been. The MLF was left unchanged for the 8th time in a row, and the liquidity was a little bit tempered. How bullish are you on China relative to Japan? Because Warren Buffett's all in on Japan, isn't he?
All in Japan. We went into China in November as soon as they started talking on reopening, and then we exited end of January. We made roughly 13% on that position. We're on the sidelines with regards to China as well. Japan, they're easing. They're expanding. It's quantitative easing, so absolutely, the water is warm. We're getting in.
Ryan's got a big smile, a bigger smile than any other asset class that we've spoken about this morning. That's Ryan Lamont there. Thank you very much for making it to the program. He's the CEO and co-founder of Neovision Wealth Management. We still have much more to